Today in the livestock market, cattle was lower. Those futures have found some resistance at this level. Certainly, we're down 1 and 3/4 cents. However, there still seems to be some tight supplies, and I think that that's a situation that we may be facing as we go forward. Just something to keep a look at. But at this point, demand, whether it's good or bad, should be what will be driving the market from here on out, at least for a while. And keep in mind that that gap still remains really just a couple dollars above where we are. But we have not been able to fill that for the last week or so. So that's just kind of an interesting little tidbit. But technically, we might fill that gap at some point. CVAL for the live cattle is at 11.3%. The feeders did fall as well. That heavy profit taking really reversed the market out. There's not much else that moved that market. We were down $4.50 today, and even over $6 for since Monday. So the April contract got down to 254.40. The market seems to be correcting, and month end is tomorrow, so perhaps that's why we're getting a little bit more swings in the market. The feeders CVOL is at 13.7%. Today, hogs were a little bit mixed. We did spend time on both sides of unchanged. The higher cash and cutouts in this overbought market kind of equals a sideways trade, and that's the trade action that we got really all week. There is a concern about increased demand, but the futures seem to have plenty of support at this point, and so that's why we're seeing a little bit more of gyrations in the market, kind of staying right between 85 and 88, really since last week. The CVOL for the lean hog market is at 21%. So, after digesting the cattle on feed report on Friday, the market is kind of slowly trying to manage itself a little bit. And with tomorrow being the last day of Friday, we might see a little more juxtaposition before we start March on Friday.